Ladies and gentlemen, good day and welcome to the Rainbow Children's Medicare Limited Q2 FY2026 earnings conference call hosted by IIFL Services Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. I now hand the conference over to Mr. Rahul Jeewani. Thank you, and over to you, sir.
Hi, good morning everyone. This is Rahul from IIFL Capital. I welcome you all to the second quarter earnings conference call of Rainbow Hospitals being hosted by IIFL. From Rainbow, we have with us today Dr. Ramesh Kancharla, Chairman and Managing Director, Mr. Vikas Maheshwari, Group CFO, and Mr. Saurabh Bhandari, Head of Investor Relations. Over to you, sir, for your opening comments.
Thank you, Rahul. So, good morning, everyone, and thank you for joining us for Rainbow Children's Medicare Limited earnings call for the Q2 FY2026 and first half of the year. So, I would like to start with a few key strategic and operational updates for the quarter. During the quarter, our operational performance showed some softness, largely influenced by low incidence of seasonal illnesses, resulting in lower patient volumes in general pediatrics and also pediatric intensive care. In addition, early festive seasons like Ganesh Chaturthi and also Dussehra compressed the typical peak period for admissions. These factors collectively led to lower occupancy levels and a transient impact on the financial performance. However, the underlying business fundamentals remain strong, with the continued growth in specialty services, disciplined cost management, and steady progress in operational efficiency. However, these challenges are temporary, and we expect normalization in upcoming quarters. I'm pleased to inform you that the acquisition of Prashanthi Hospital in Warangal, Telangana State, and the Pratiksha Hospital in Guwahati, making Rainbow a strategic entry into the Northeast region. Both the hospitals have now been fully integrated into the Rainbow network, and initial traction has been encouraging and in line with our expectations. Further, we commissioned our new hospital in Rajahmundry of 100 beds in the East Godavari district of Andhra Pradesh. Having a regional hubs in Visakhapatnam, Rajahmundry, and Vijayawada would cover most of the affluent parts of Andhra Pradesh. We are now gearing up for the upcoming commencement of two hospitals in Bangalore, Electronic City, and the Hennur branches, further expanding our penetration in this key metropolitan city. With this additional, Rainbow Children's Medicare Limited will conclude its current high bed addition, having added 780 beds over the past 2 years' time through expansion as well as acquisitions. To dwell on the financials for Q2 FY2026, the revenue registered a growth of 6.5%, amounting to 445 crores. EBITDA increased by 1% to 149 crores, while the PAT was degrown by 4%, registering 76 crores. The overall occupancy rate for the quarter was 52%. I would like to share the project update. The Electronic City in Bangalore City of 90 beds is fully ready for clinical commencement, waiting for the government approvals. The Hennur facility of 60 beds in the final stages of conclusion and is expected to commence operations by January 26. The regional hub hospital at Coimbatore is in the project phase now and is expected to ready by the end of the FY27. In Gurugram, the construction work was progressing rapidly at both 44 and Sector 56, but the work has been stalled by the government temporarily because of a dangerously high pollution in Delhi NCR. We have signed up for 150-bed hospital in Pune on Bangalore Highway, and is currently in design phase while waiting for the permissions. I am pleased to announce the appointment of Mr. Abrar Ali Dalal as a Group Chief Executive Officer for Rainbow Children's Medicare Limited, effective from January 20th of 2026. This appointment marks an important milestone as we fortify the leadership team to drive the next phase of growth and strengthening our business operations. On international business, though some of the issues regarding the medical visas persisting, we have seen some progress on international business front with a monthly revenue tracking 3 crore rupees. We see the business returning to normalcy in the coming quarters. Clinically, we continue to do very well in our pediatric specialties and quaternary care with improved case mix and the revenue contributions. I would like to share one of our remarkable clinical outcome during this quarter. A 27-year-old expectant mother with a underlying complex cyanotic congenital heart disease having a single ventricle underwent shunt surgery called the Glenn procedure to improve her oxygenation and quality of life during early childhood. Though the definitive procedure was planned, the family never turned up to the hospital because of a decent quality of life. She got married and planned for pregnancy. Unfortunately, she lost 3 pregnancies in her 6th and 7th month of pregnancies because of intrauterine death of the babies. Congenital cardiac conditions which are missed, diagnosed and neglected would end up in causing significant problems in the early adult and late adulthood onwards. This group of conditions, usually called as a GUTCH, which is a grown-up with the congenital heart diseases. These conditions are best dealt by the pediatric cardiologists along with the cardiac surgeons. Here, this lady has come to us, to Rainbow Children's Hospital and Cardiac Institute, with a hope to save her baby for a current pregnancy. During the evaluation, she was found to have oxygen saturations of around 75. This clearly indicates that continuation of the pregnancy may result in intrauterine death of the baby because of poor oxygen saturation. Scientifically, this could have happened to her in the previous pregnancies, resulting in the intrauterine death. Since any surgical options carry high risk of maternal and fetal mortality, our cardiac and perinatal teams had an extensive deliberations and also finally decided to rescue the baby through through non-invasive procedures. The pediatric cardiac team planned innovative procedure, first of its kind, doing through catheterization, placing a stent from the single ventricle through the pulmonary valve, which is atretic and perhaps malformed, into the pulmonary artery. This was the plan. This plan was executed meticulously and post-procedure, successful procedure, the oxygen saturation has gone up from 75 to 94%. The mother's cardiac assessment post-procedure was extremely satisfactory and the fetal viability was good. This pregnancy was followed up very carefully by the cardiac as well as the perinatal teams and successfully delivered a full-term healthy baby. I was so excited and went down to the teams to celebrate this success. Looking ahead for the second half of FY26, ensure the timely commission of our 2 spoke units in Bangalore, focus on strengthening business operations, delivering sustainable growth across its network, strengthening our sales and marketing function across the key markets to deliver sustainable growth. So let me take this opportunity to thank our medical teams and also leadership teams for their dedication and hard work. We are grateful to our stakeholders for their continued trust in building this incredible healthcare for children and perinatal services. With that, I now hand over the mic to our Group CFO, Mr. Vikas Maheshwari, to take you through the financial details for the quarter. Thank you.
Thank you, sir. A very good morning to all of you, and thank you for attending this investors conference. I am pleased to brief you on the financial performance and the key developments of Rainbow Hospitals for the second quarter and the first of FY2025-26. Our operating revenue for the quarter stood at rupees 445 crores, reflecting a growth of 6.5% when compared to the corresponding quarter of the previous financial year. For H1, our revenue stood at 798 crores, reflecting a growth of 6.7% when compared to H1 of the previous financial year. Our EBITDA for the second quarter amounted for rupees 149 crores, marking a muted growth compared to the same period last year. For the H1, EBITDA stood at 253 crore rupees, reflecting a growth of 5% when compared to the H1 of the previous financial year. The EBITDA margin for the current quarter is at 33.5%, while our H1, our EBITDA margin is 31.7%. The profit after tax for the quarter is 75.6 crores, which is marginally lower than the last financial year. For the H1, our PAT stood at close to 130 crores, reflecting a growth of 9% when compared to the H1 of the previous financial year. In terms of the operational performance, outpatient volumes witnessed a growth of 5.7% when compared to the corresponding quarter in the last financial year. The deliveries grew by 6.8% compared to the corresponding period of the last year. Inpatient volumes witnessed steady volumes when compared to the corresponding periods in the last financial year due to the reasons outlined by CMD sir earlier. Our payer mix continued to remain robust, with the balanced with 53% of the revenue coming from the insurance and the balance 47% coming from the cash patients. For the H1, the payer mix stands at 48% with cash and 52% with insurance. I am pleased to inform that the company's balance sheet remains very strong, with a net cash position of roughly 556 crores as of 30th September of this year, and will support our ongoing capital expenditure plan. Given our current cash and anticipated internal accruals in the coming years, we remain confident in our ability to complete all the planned capital expenditure through internal accruals without any debt financing. During the quarter, the company invested close to 261 crore rupees in the capital expenditures towards expanding and enhancing our services at existing and upcoming hospitals, and that includes the acquisition of the Guwahati and the Warangal hospitals. With these insights, I conclude my financial update. I now invite questions and suggestions from the participants. Thank you very much.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Damayanti from HSBC. Please go ahead.
Hi, good morning, and thank you for the opportunity. My first question is for Dr. Ramesh. So with the appointment of CEO, how your involvement or how your role will change in the company?
Yes, Damayanti, I've been the front line for a long, long time. And also the time has come that, there is a professional management of this company. We are expanded significantly and also the multi-city. And it's important that, of course, I'm there as a chairman, aligning with a CEO and the strategic team. And drive of the professional CEO is definitely is much needed for the organization of this size to drive the operation, to kind of guide the facility directors across and functional heads. It's a professional job. I think it's very, very important to have a proper chief executive officer who's kind of a significant experience in driving independently of the operations P&L for the organization. So that's why we done extensive deliberations and interviews, and then finally we chose to have Mr. Abrar Ali as a CEO.
Okay. So obviously, I think so you will be there to, handhold and advise the company as we progress ahead. Thanks for that. My second question is on your new units, Prashanti and Pratiksha. So both integrated during second quarter, as you mentioned. So just some color on the revenue contribution which came through these new units and your plan and expectation for scaling up operations in these two units.
Yeah, this is the early phase. They were doing about, the Pratiksha was doing about 8.5 crores, because when we've taken away, changed over completely as the management, and also even the insurance, everything has got changed. We are applied in the process of getting all the permissions. Of course, the revenue is decent enough, but I think it will show up actually uptick on the revenues probably by December onwards. Now we have all the permissions and all the insurance everything on board. The same thing with Warangal also. It did take some time being inside tied to a city to obtain all the insurance and those things. There was some decline in the deliveries and those things because of all the insurances have not turned up. So now they're all on the board. Now we expect to see a revenue doing very well in this. We are very happy with these two acquisitions. The integration went very, very well and seamlessly. Both the doctors as well as the staff, nursing, our operating model has been instituted very well. I think that's where we are kind of very optimistic about growth of these two units.
Sure. So you are largely done with integrating the entire two units, and maybe from March quarter we will see meaningful pickup in revenues. So just a point, I think Pratiksha, you mentioned 8.5 crore kind of number which came in 2Q, or what was that number?
It's about lower than that because of the insurances and those ones. The integration was actually with SAP, supply chain, and HRMS and HAS. A lot of things I've done because it was a company which is operated in multiple heads because pharmacy was in a different company, operations in a different company. They were operating on 3-4 companies, so that was a challenge was to integrate all those things and then drive it. But our team has done a great job. I think it's completely operates like a Rainbow Children's Hospital.
Got it. That's helpful. And my last question is on your international business. Can you remind us, you mentioned there are some issues and which should be normalized in coming quarters, and then you expect things to pick up?
Yes, still the issues remain with Bangladesh and some other markets, like, the visas not been training for the patients. So, but the overall other areas, the African markets have started becoming more active. So we have kind of where we have left about 1.5 years ago. We come back to the business of 3 crores per month, which was the business before. Slowly, I think it's improving month on month. That's what we can say now. We are hopeful that now it will come back to normal. I think it's not going to be too long time.
Okay, sir. Thank you for your response, and I'll get back in the queue. All the best.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is on the line of Kritika from Prospera Financial Solutions. Please go ahead.
Yes, congratulations on a strong quarter. I actually want to know, like you have mentioned earlier, that the payer mix was roughly 52% insurance and 48% cash in Q1. Has that ratio changed meaningfully in Q2? And more importantly, where do you stand on pricing renegotiation with issuers in your key market? Because with rising specialty case mix and inflation in clinical inputs, Are you confident that the price revision in Hyderabad, Bangalore, and Chennai will come through with the timeline you had guided earlier?
Yes, so the payer mix for the quarter 1 and the quarter 7 is more than the same line. There is not much of the change. This is a very balanced mix which we are driving. The good part is that we don't do any government-related schemes businesses since it is a pediatrics. So our payer mix is only cash and insurance. As far as the insurance renegotiations is concerned, I think our team has already concluded for the Hyderabad. For the Bangalore cluster is under negotiation and it's happening. So as and when, so it is a routine business for any healthcare operator, right? For the hospital company, because the insurance keeps falling on some multiple timelines of the life cycle. So as and when it comes, we keep negotiating, and so far we have been very successful in terms of the pricing and hedging against the inflation cost and the type of facility we have built and the type of complex work we do. We have been able to, negotiate it properly with the insurance company so far. So we expect that, yes, we will be able to manage that going forward also.
Okay. And my second question is, one of Rainbow's biggest differentiator is your strength in neonatal and pediatric intensive care. Could you share whether NICU and PICU utilization improved in Q2 relative to Q1 and whether that was a meaningful driver for the RBAB recovery? And do you see that NICU capacity approaching constraints in any of your hubs which may require further expansion?
So as far as the capacity constraints of the PICU and MICU is concerned, I think whatever the facilities we have is very well built, keeping in the future requirements. So we have a headroom available in most of our hospitals to accommodate these type of patients in our MICU and PICU. So we don't see as of any constraint on such capacity utilization.
Moreover, see, we do a hub and spoke model. I don't think there is a problem anywhere accommodating the patients. We always try to see that, based on the demand, and when we do spoke, should we do increase the bed capacity or reduce the bed capacity? We always adjust among the units between them. So that optimization is always done. I think as we move forward in future, what we had an earlier, the number of beds in ICUs, maybe a kind of the numbers wise, we probably need to optimize a little bit down because of number of the units are distributed within Rainbow network itself. Because in the past we used to think about the hospitals to have a larger units. Now because of a lot of micro market driven business, we try to optimize number of beds to see that the efficiency is improved.
Okay. Thank you. That was very helpful.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Bansi Desai from JP Morgan. Please go ahead.
Yeah, hi. Firstly, congratulations on the CEO appointment, and we look forward to speaking with him. Sir, my first question is that, if we just step back and look at the last 3 to 4 years, while Rainbow has done very well operationally, we've seen seasons, impacting our business probably, twice in the span of last 3 to 4 years. I'm just trying to understand that, is this impact felt similarly across all your units, or is this more pronounced in one region over other? And the second question in continuation to that is that as we look ahead and as we diversify our presence in North and Northeast, should that in any way lessen the impact of seasonality that we are feeling?
Yeah. See, the seasonality, by and large, what we see is the southern states behave very similarly. Whether it's Hyderabad or Bangalore and Andhra Pradesh behaves in one cluster. Chennai may be slightly different because the level of monsoons comes little later. But the Andhra Pradesh and Hyderabad, and Telangana and the Bangalore kind of follows one pattern. So when we look at the Northeast follows fairly different pattern of seasonal illnesses. So I think in the North is the fairly kind of again it's the peak seasons is always going to be October, November, December, January because more of pollution driven in the NCR. So this is some degree of variation will be there, but South largely behaves as a one unit.
And sir, yeah.
Please, yeah, carry on.
No, sir, I was just saying that, we've entered Northeast, with Prashanti's acquisition, but do we have plans to scale up our presence there?
Yeah, firstly, we would like to kind of see that how we can build our specialty footprint there. So we already started some very interesting things in the Northeast. One is that we started transport services. In the last 1.5 months, we've done about 14 road transports, which never had been done in the from Guwahati based and entire Northeast. We've gone far off distances to Shillong and all the areas and done the transports of critically sick children. That's one thing we've done. We are adding specialties one after the other. We had pediatric neurology service in Guwahati, pediatric nephrology and pediatric respiratory medicine. So I think one of the important things is to build this as a hub hospital. That's what is our focus is, and we're trying to see that how fast we can do a pediatric cardiology, cardiac surgery in that area, in our Guwahati hospital. So we want to see that the base business is very good and very strong, and reputation is very good. We would like to see that this hospital pediatric services to be kind of for the Northeast. Then we can look out for the spokes in the smaller cities like Silchar is a good place, and there is a Shillong is a good place. There are opportunities are there. They're all very, very greenfield. So we would like to strengthen ourselves first here. Next year time and start thinking about it.
Thanks for that, sir. And secondly, if you could also update us on how our IVF centers are performing. It's been a year. If you could comment on how they're doing operationally and also in terms of, patient volumes.
Yeah. As expected, our IVF growth is coming mostly through our own networks plus and B2C. So B2B is almost kind of close to kind of very negligible because obstetricians feel competitive because to send their infertility patient to Rainbow, which is a strong obstetrics network. So we had a sales teams, but that didn't work. See, what is working for us is that one is in-house growth, number one. Second thing is B2C. Both are collectively, actually, we are growing pretty impressively. About the last year, the same quarter to now, is about 40% growth is there. But it's a low base, but we would like to see that we continue to grow impressively 25% in future.
All right. I have questions. I'll join back in the queue.
Sure. Thanks. Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Rahul Jeewani from IIFL Capital. Please go ahead.
Yeah, thanks, sir. Sir, you did talk about seasonality in terms of obviously impacting our performance this quarter. Now, if we look at the IP volume growth between the mature and the new hospitals, it seems that the IP volumes in mature hospitals have declined a high single-digit kind of a number between 8-9% YOY. So why is the impact of seasonality more pronounced in the mature hospitals, given that for some of these mature hospitals, we would be doing other services as well, like at the Banjara Hospital?
Yeah. So the mature hospital has got a standard regular business, which is about 50%. So we expect them to do in the Q2 and Q3 about 60+%. If you go back and see that the last year we have done about 65%, okay, 66%. So when there is that 66%, the 10% growth comes from the seasonal business. So when we see our occupancies, that the 10% comes from the seasonality, and the revenue generation will come about 12 to 14%. So which is why we typically guide about our occupancies goes up by about 8%. Our revenue grow by 12% in the Q2 and Q3. This typically happens in most of the years, but sometimes it's cyclical when there is no seasons. But that's what exactly we have seen it. We've seen our base business is pretty good. Our EBITDA stands is pretty still robust, but your occupancies are down by 8%, and your revenue down by probably 10%. If there is a kind of seasonality was there, probably we would have done about 16-17% of a growth. So this is exactly the clear cut. Why the matured hospital takes, because when there is no seasonality, people get attracted to come to popular hospitals in the seasons. So the second important thing is the pediatric intensive care. When there is a seasonal illnesses are in the heightened, there's a significant number of some portion of children become sicker because of pneumonias and some of them becomes more sicker. They require intensive care services. So these two play hand in hand, general pediatrics and pediatric intensive care in the seasonal illnesses duration, which is why we have seen about 8-9% of the dip overall in our occupancies. More we see because in the new units, because they are low base, we don't see much of a difference in the new unit because they are about the 42% businesses. So here you see what higher percentage businesses. So there is a regular fixed business is there about 54% of the business, which is pretty standard.
Sure, sir. So this 8 to 10 percentage point occupancy contribution and 12 to 14% revenue contribution from the seasonal business, you seem to indicate that's the contribution at the mature hospital level for 2Q and 3Q generally.
Yeah. That's exactly what
Sure, sir. Sure. And sir, with respect to, let's say, the IVF revenue, so can you talk about in terms of some of the levers which could help us to reduce the impact of this seasonality in the overall business? So obviously Northeast expansion would help. Can IVF scale up also help us in reducing the impact of this seasonality? So what is our IVF revenue contribution right now, and where do you see that number settling over the next, let's say, 3 to 5 year period?
I think about we come up to about 3.2%. 3.2% of our total top line this year. So I mean it would go up, but I'm not sure how much is going to the percentage. But overall, I think we would do clock about 40 crores plus in the current year, and which is grown almost 50% in the last 3 years' time, year on year. And obviously that you have specialty growth and super specialty growth, and also some of the specialized services what we do, and the rare diseases. These are all the areas we'll occupy as we kind of mature more and more hospitals.
Oh, sure, sir. Sure. And sir, the next question I have is, as you indicated that now most of our expansion plans would get completed by FY26, and the next round of expansions would come online in FY29 only. So now as some of these newer hospitals scale up over the next 2-year period, can we see a margin expansion playing out for Rainbow over the next 2 years as some of these newer capacities scale up?
No, certainly that. I think what's more important for us is to drive our operations, and also, as I told you in the last earnings call, that now we have a leadership in the sales and marketing, and and who is doing very well. And also now with the CEO joining, I think is strengthening the overall leaderships. And also what we have is the next couple of years' time is a very pure play of driving the growth and driving the revenue growth. We'll have to see that. We always guide about 25% is our base EBITDA, pre-AS EBITDA. We will stick to that. We'll continue to drive more top-line growth.
Sure, sir. And any comments in terms of what kind of a top-line growth are you looking at from a next 2-year perspective?
I think moving forward, we should do 20% growth. That's what next 2 years is, which we aim at. Because we have done all the expansions, we've added plenty of beds in the growing business, and the growth areas. And as long as we stabilize our mature units to kind of 8-10% of growth, rest of them grow at about 25%. Consolidated, we do 20% growth.
Sure, sir. So this 20% growth includes the contribution from M&A, or you are talking about the organic growth for the business?
For including M&A. They're integrated now, so they're part of the business now.
Sure, sir. Last question before I join back the queues. We continue to generate very healthy cash. Right now also we have around 560 crore of net cash on books. So with the Guwahati and the Warrangal acquisitions being done, are you looking at more M&A, or would you slow down, let's say from a 2-year perspective, scale up these newer assets and then only evaluate fresh M&A? So any color there would be helpful, sir.
Surely, if there are M&As which are appropriate, we would definitely be kind of interested. If such opportunity comes, we would obviously be looking at it. There is cash on the balance sheet. We have got execution capabilities. What we look at is that M&As where we can add scale, we can include them to our operating model and add the scale further. We would definitely look at them.
Sir, I will join back the queue. Thank you.
Thank you.
Thank you. The next question is from the line of Isha, an individual investor. Please go ahead.
Hi, good morning. So I'm fairly new in analyzing the hospital industry. So sir, my first question is, how is the company able to maintain such high gross margins of 86-87%? When the industry average is around 73-74%, how are you able to maintain such high gross margins? And my second question is... Yes, sir. You can go ahead.
With respect to the gross margin, there is a difference in our specialties and the multi-specialties which are mostly listed. I think the pediatrics and on the maternity space, we are the only company. And in our industry, that is what is the cost of the consumable, which is between 12 to 14%, depending upon mix of the services which you are providing. That is why the gross margins are higher.
Yeah. See, because most of the adult hospitals are surgically driven. We are medical hospital. So in medical hospital, the cost of implants and the other is much lower, and hence you see higher gross margins.
Okay, sure. So, sir, my second question is, what capex do we expect to incur in H2 FY26? And what prediction should we make for the hub and spoke models bed? What capex per bed should we project going forward?
I think the project which is left out is Hennur and Electronic City, which is Bangalore, is happening. I think it's the leftover payment and the Gurugram project which is happening there. So I think for the second half, I think close to 100 crore rupees amount should go. And for our Pune and Coimbatore project for the next 3 years, you should budget close to amount of roughly 600 crores.
Okay. And so my third question is, how do we see competition affecting the occupancy rates in especially the hub region?
Well, so competition will always be there, and also the market also expanding it. It's all a question of how do we navigate ourselves, keep ourselves to grow. The competition in Hyderabad, competition has been there for the last 15, 18 years time. And that competition will continue to grow. So that's the life. I think, we just have to work around and play out our strengths and expand more micro markets and be a dominant player. I think that's the only way forward.
Okay. Thank you, sir. Thank you for taking my questions and all the best for your future endeavors. Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Vishal from Systematics. Please go ahead.
Yeah, thanks for the opportunity and good morning, everyone. I heard that you talked about expanding in Pune. Can you kind of give some color as to what size of a hospital you're looking there and any competitive? Are there any large pediatric hospitals already there in Pune?
See, in Pune, we are looking at 150 bed, the children's hospital with perinatal services. A lot more focus on children, and this is going to be in the Bangalore highway, closer to the Baner. When you look at the landscape in Pune, and Pune is kind of another city like Hyderabad and Bangalore today, and there are a lot of mom and pop stores which are doing well, because a lot of deliveries are happening and also a lot of child population is there in Pune. And also it's got a fairly decent, draining areas into Pune. So this is the competitive landscape. The real children's hospitals who are doing significant work are more on the trust and medical college side, not much in the pediatric file. For example, Dinanath Mangeshkar, they have a fairly large department, and also the couple of medical colleges got a large department. There is some pediatric units are there, which are small, about 50 beds and 60 beds, doing some degree of ICUs and those things. And not a comprehensive pediatric hospital. There is a need and there is demand. Both of them are there. It all depends on what kind of professionals you're going to have it, how you're going to drive your outcomes.
Understood, sir. So probably this would be the first pediatric hospital that would have the most broadest suite of services for pediatrics.
Exactly.
Yeah.
That's exactly.
And with respect to your existing business, if you could share what percentage of our business is generated from high-end services like transplant, oncology.
I think we do within tertiary quaternary services together. It's very difficult to separate in children's hospitals. So all put together, about 40% is our tertiary care and quaternary care together, including transplant. About 40% of the business.
Okay, and is this part of the business growing faster than the rest of the business?
I think when you do a hub and spoke model, it gets diluted, isn't it? Because you're doing a lot more spokes also. The spokes don't do too much of the high-end care, so you'll get kind of will remain in the kind of the same proportions. For example, if you do more and more spokes, the obstetrics also kind of what we have seen obstetrics from 20% to 25%, now to 30%. So it keeps growing. Dynamics keeps changing because when you do a bed mix of hub and spoke model, this is bound to happen.
Okay. And like within our large hub hospitals, Hyderabad, Bengaluru, Chennai, would large part of the high-end care be delivered from Hyderabad, and while Chennai and Bengaluru are yet to catch up?
Yeah, it's not catching up. It actually takes a long time to build the high-end services for children. One is the expertise. Number 2 is awareness. Number 3 is outcomes. So all these things will take its own time. So this is it took a long time for us in Hyderabad, but we have started doing a transplants, and we do renal transplants, renal bone marrow transplants. We started doing liver transplantation both in Chennai and Bangalore now. But to come to a kind of level of maturity, it will take time, long time.
Okay. And just one final one on international patients. So two things. One is getting international patients in pediatric care. Is that more difficult than probably a general hospital? And second, what is the current state? Like, do we have a minor contribution coming from the international patients?
See, it's a long shot. We are working on it. We started working on international business, and it was going fairly well till the recent geopolitical situations, whatever has happened, the drop on international business with Africa as well as Bangladesh and all over. So I think we are optimistic as we move forward, moving into the future. The international business, even for the pediatrics, is going to be a significant component. That's what my belief. I'm sure we need to do a lot more networking with the doctors in the international markets. For example, the pediatricians or pediatric cardiologists or pediatric specialties, wherever they are. I think that relationship is going to build more business for us.
Got it, sir. Got it. But any sense on how large this can become? 10% of the top line, maybe next 5 years or so?
I won't put a number, but I think we should aim at 10% at least.
Okay. Thank you very much.
Yeah, thank you.
Thank you. The next question is from the line of Anshul Agarwal from MK Global. Please go ahead.
Hi, thank you for the opportunity. Am I audible?
Yes.
It's first a clarification. I think I mentioned saying that the top line target that we're aiming or targeting is at about 20%. Now, considering that H1 was at 7%, should we or is that any indication around H2 being stronger than the usual H2 versus H1 kind of growth?
So, Anshul, let me take this question. So, what Sir has told that 20% CAGR growth is over a period of time. The basis is two. One is that whatever the capacity which we have added, which is a large capacity, is around 47% from the low base, right? There's around 780 beds which we have added, and all the capacity expansion and the super specialty services in our hub hospital at Bangalore, Chennai, and ramp up of the two acquisitions which we have done, the Guwahati and Warangal. So over a period of time, next 2.5 years, 3 years, you should look at the revenue growth of roughly close to 20% CAGR. So this is one. Second half, how it will pan out, it is very difficult to tell. But obviously, we should be just not on the quarter-on-quarter, but over a period of long trajectory. So far, we have been able to deliver 3 years or 5 years CAGR. If you look at it, is roughly 16-17%. Since the bed capacity is large being added, we are optimistic, that we should be able to deliver at around 20% of the growth in next 2.5-3 years CAGR.
All right, so growth could be back-ended, is what you're saying, on back of expanded capacity.
Yes. Acquisition integration.
All right. Sort of a follow-up on this only, sir. Our depreciation number has not increased on an H1H basis. Would this also sort of grow in line, considering that we've added almost 800 odd beds in the last, say, 2 years?
So the commercialization of the Rajahmundry and the two hospitals, the Bangalore, which will happen in the quarter December, right? So we'll see some uptick of the depreciation on that side. Plus, in our case, depreciation includes some part of this Ind AS working, right? This lease which gets divided into finance cost and depreciation. But as a percentage, you should look at the similar type of trend, except 1 or 2 quarters where some 3 facilities getting opened, little bit of the bump up. Otherwise, it should be on the same range.
Got it. Third question I had was any update on the break-even of the Bangalore and the Chennai hospital that we opened in 2024? the Annanagar and the Sarjapur hospital? Are we closer to break-even in Bangalore?
So the Sarjapur hospital was broke even in about 15 months' time. Annanagar took about, exactly what we guided, about 18 months' time. The last few months, it's a cash break even. I think whatever we have guided, they are following the line.
So despite seasonality impact in the current quarter, the ramp-up on these hospitals has been in line with what we had guided?
Yes.
Got it. That's it from my end. Thank you very much.
Thank you, Anshu.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Dhananjay from Alchemy. Please go ahead.
Dhananjay, we are not able to hear you at all.
Properly.
Dhananjay?
As there is no response, I take the next question from the line of Rahul Jivani from IIFL Capital. Please go ahead.
Yes, sir. Just a few clarifications. You indicated capex of rupees 100 crore in second half, but I missed the number which you said for Pune, then Coimbatore and Delhi NCR combined. Did you say 600 crores?
So for including Coimbatore, Pune and Gurgaon, we should be doing some capex of roughly close to 600 crore rupees, Rahul.
Sure, sir. And are you including the initial, or let's say the capex which you would have already incurred for the 2 NCR hospitals, or this is the incremental capex over the next, let's say, 2 to 3 years?
Rahul, we are building, let us talk about Gurgaon. We are adding roughly close to 450 beds, right? And here the land and building is owned by the company which we are building it up. So it will cost close to 1.5 plus onward for the construction of the whole facility, right? So the capex is large. For that, we have already spent for the land close to 180 and roughly 20-30 crore rupees for the other work for which we have already spent the money. And the balance construction which is progressing over a period of next 2.5-3 years will be spending that much of the amount. So balance, out of that, whatever the amount I have told you, the maximum amount pertains to Gurgaon project.
Sure, sir. So 600 crore over, let's say, 27 to 29.
Yes, 3 years.
Sure, sir. And sir, with respect to the break-even for, let's say, the spoke hospitals, so your spoke hospitals in Bangalore and Chennai achieve break-even within 12 to 18 months. Can you similarly talk about the timelines for some of these regional hospitals which you are setting up in, let's say, the core AP Telangana market? So how much time would a Rajahmundry and a Coimbatore, once they are commissioned, how much time would those hospitals to achieve break-even?
Yeah, sure. Rajahmundry would do it in about 15-18 months time. So because the brand visibility in Rajahmundry is very, very high. So if you look at the coastal Andhra Pradesh, every household knows about Rainbow Hospitals. And it is a huge reputation. Every family knows about it. So the Rajahmundry is actually, we started about a month and a half ago. The traction is already pretty good. That's how we look at Rajahmundry. Rajahmundry will get integrated very, very soon. And the network between Rajahmundry, Visakhapatnam and Vijayawada would cover a vast, almost from Srikakulam to right up to Ongole, which is the most potential area for Andhra Pradesh, are going to be covered by these 3 hospitals. And another Nellore district will be covered by the Chennai hospital. So we are there almost from the entire Andhra Pradesh coast till Chennai. So that is going to be Warangal anyway is acquisition. So we need to just build on more pediatric business. Obstetrics they do very well. And these 2, Electronic City and Hennur, Electronic City might take a little longer time, about 15 months time. Hennur would actually break in 1 year time.
Sure, sir. And sir, with respect to, let's say, the regional hospitals which you are adding in these, let's say, tier 2 kind of markets, can you talk about how your pricing varies in terms of pricing between tier 1 markets and some of these tier 2 markets?
So again, the tier 2 markets. So we have Vijayawada. Vijayawada is a matured hospital, which is almost 15 years of operations. The pricing of that hospital to Hyderabad is almost like 75 to 80% of Hyderabad costs. If I go to Vizag and Rajahmundry, I would probably about 70% of a Hyderabad costs. 65 to 70% of Hyderabad costs. Because they are a little more of a cash oriented, less of an insurance business and those things. You tend to drive more of occupancy, more of a popular for some time. Then you'll get settled after 3, 4, 5 years time as your reputation builds further.
Sure, sir. So let's say pricing in these tier 2 markets could be 25 to 30% lower than what we have in tier 1 markets.
Yeah, 30 to 35, Rahul.
Yes, 30%.
30%.
But at a steady state level, these hospitals should be doing margins which you make in your tier 1 hospitals, given the cost structures also would be lower in these markets.
That's true. I mean, for example, Vijayawada market has margins of like Hyderabad only. So, I mean, there may be a place like Vizag, there may be the 4-5% less because it's a city of difference. There's a lot of public sector and a lot of district populations who are price sensitive, those things. But Rajahmundry is pretty good. Rajahmundry is an affluent part of Andhra Pradesh.
Sure, sir. And sir, last question from my side would be on the Delhi hospital, the Madhukar Trust Hospital. Can you talk about in terms of the ramp up at the Madhukar Hospital in terms of how the EBITDA margins are playing out, and what is the balance receivable from the Madhukar Trust in terms of the loan which we have extended to that hospital? Thank you.
Yeah, I think that this year we're encouraged to see that it is doing a double-digit EBITDA finally. So, considering this cost structures and model, I think the last the 4-5 months has been consistently doing about double-digit EBITDA, and we see that this business to grow in the next couple of years fairly well. So, however, the EBITDAs in this hospital are not going to be in the best case scenario, maybe 15-16%, even the best scenarios, because of the free beds. What happens in the free bed in children's hospital? It is when you get sick patients in ICUs and free beds, it drains away a lot of revenue, and that's why it's a low EBITDA margin hospital.
Sure. Vikas, in terms of outstanding the receivable from Madhukar Trust?
So the principal outstanding remains same, Rahul, is at around 23-24 crore rupees, plus whatever the other things which is there. If you read through our financials, last year we have restructured the repayment schedule of theirs for moratorium and then given us some timelines for the repayment of that. So as on date, the status quo is same as was the 31st March.
Sure, sir. And we were also supposed to convert the Rosewalk Hospital from a premium birthing center to, let's say, a regular birthing center. So has that played out?
Yeah, it's been done. It's doing well. It's doing much better now. It's difficult to erase that name of luxury from people's minds, but it is doing much better now. I think it's also tracking really well.
Sure, sir. That's it from my side. Thank you.
Thank you, Rahul.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thank you for joining today's conference call and for your thoughtful and thought-provoking questions. It is always a pleasure to speak with all of you and take all the questions to clarify. Your continued support is instrumental to our strategic journey. If there are any other further questions, please do connect with Mr. Saurabh Bhandari, who heads our investors relationship, at the emails which is given into our press release. Thank you very much.
On behalf of IIFL Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.